For most people, credit cards are a source of anxiety. They are debt traps, dopamine dispensers that ruin your financial future, and plastic shackles that keep you broke. But for the financially savvy, those same little pieces of plastic are the exact opposite. They are tools for free travel, thousands of dollars in passive cashback, vital consumer protection, and the fastest way to build a rock-solid credit score. The difference isn't the card. It's the user. Today, we are doing a deep dive into the absolute best ways to use credit cards. We are moving past the fear and turning your wallet into a wealth-building machine. This is your strategy guide. Setting the stage. The tool analogy. Before we get into the tactics, we need to reset your mindset. Think of a credit card like a power tool. A chainsaw is incredibly effective if you need to cut down a tree. But if you don't know how to use it, or you use it recklessly, you're going to get hurt, badly. Credit cards are financial chainsaws. Used correctly, they build your financial house faster than cash ever could. Used incorrectly, they chop down your net worth through high-interest debt. If you currently have credit card debt that you cannot pay off this month, your only goal is to pay that off. This video is for when you are ready to use the tool properly. The 2 golden rules. Safety first. If you take nothing else from this video, take these 2 golden rules. They are the foundation of everything else. Golden rule number 1. Payment in full, every single month. No exceptions. The credit card industry makes its billions off people who pay the minimum payment. When you carry a balance, you get hit with an annual percentage rate, or APR, often over 20%. If you buy a $1,000 laptop on a card with 20% APR and only make minimum payments, you won't just pay $1,000. You could end up paying double that over years. The best way to use a credit card is to set up automatic payments for the full statement balance the day you get the card. Treat it like a debit card. If you don't have the cash in the bank right now, you cannot afford to put it on the credit card. Golden rule number 2. Watch your utilization. Your credit utilization is how much of your available credit you are actually using. It makes up a massive 30% of your credit score. If your card has a $10,000 limit, and you have a $3,000 balance, your utilization is 30%. Lenders get nervous when they see you maxing out your cards. The general rule of thumb is to keep it under 30% to show you aren't desperate for credit. But the best way? Keep it under 10%. That is the sweet spot for supercharging your credit score rapidly. You can do this by making a mid-cycle payment right before your statement closes to lower the reported balance. Maximizing rewards. The free money. Now that we're safe, let's talk about the fun part. Getting paid to spend money you were going to spend anyway. The best users never use cash or debit cards for daily purchases. Why would you, when you can get a 2% to 5% discount on everything your life requires? There are 2 main paths here: cashback and travel points. Then, you layer in specialized cards for your biggest spending categories. If you prefer cooking, get a card that offers 4% to 6% back at supermarkets. If you commute, get a card offering 3% to 5% on gas or transit. By using the right card for the right purchase, you can easily average a 3 to 4% return on your entire annual spending. That's hundreds of dollars a year for doing nothing different. However, the highest potential value comes from travel point systems. If used poorly, these points are worth less than cash back. But if used correctly, by transferring them to airline and hotel partners for premium cabin flights or luxury stays, they can be worth double or triple the value of cash back. But the absolute best way to accumulate massive amounts of rewards quickly isn't day-to-day spending. It's the sign-up bonus. Banks will offer you $200, $500, sometimes even $1,000 worth of points just for opening a card and hitting a minimum spend requirement in the first 3 months. If you have a large planned expense coming up, like taxes, tuition, or home renovations, do not put it on your old debit card. Open a new rewards card, hit that bonus immediately, and pocket the free money. It is the easiest return on investment you will ever find. The hidden protections, beyond points. This next section is where most people leave money on the table. The best way to use a credit card isn't just about points. It's about the insurance policies attached to that piece of plastic. When you pay with cash or debit, once the money is gone, it's gone. Many mid-tier and premium credit cards offer extended warranty protection. If you buy a laptop with a 1-year manufacturer's warranty, your credit card might automatically double that to 2 years. If it breaks in month 18, the credit card company pays for the repair, not you. If you rent cars, this one is huge. The Auto Rental Collision Damage Waiver. When the rental counter tries to upsell you their expensive daily insurance, if you are using the right credit card, you can decline it. Your card provides primary or secondary coverage for damage to the vehicle. That alone can save you $20 a day on vacation. The list goes on. Purchase protection against theft or damage for the first 90 days. Cell phone insurance if you pay your monthly bill with the card. Trip cancellation insurance. The best users know exactly which benefits their cards have, and they actively use those cards for purchases that need protection. Advanced strategies. Leveling up. Okay, we've covered the basics. Now let's look at 2 advanced strategies. A quick warning. These require discipline. If you struggle with impulse control, skip this section. Strategy 1. The 0% APR leverage. Many cards offer 0% APR on purchases for 12 to 18 months as an introductory offer. A novice sees this as a way to buy things they can't afford. An expert sees this as an interest-free loan. If you need to buy $5,000 of furniture, you could put it on a 0% card. Instead of paying the $5,000 immediately, you take that cash and put it into a high-yield savings account earning 4% or 5% interest. You make minimum payments on the card, and then pay off the lump sum right before the 0% period ends. You just used the bank's money for free and kept the interest for yourself. Strategy 2 is churning. This is the practice of repeatedly opening cards solely for the sign-up bonuses and then closing or downgrading them later. While highly lucrative, this is a dangerous game for beginners. It requires meticulous spreadsheet organization and can temporarily ding your credit score. But for those with excellent credit, over 750, and high organization skills, it's how you fly around the world for nearly free. Credit cards are essential financial tools in the modern world. Don't fear them. Respect them. If you found this guide helpful, hit that like button and subscribe for more deep dives into mastering your personal finances. Thanks for watching.